Welcome to the NFO review series. I'm Rin Agarwal. In this video, I'm going to be reviewing the HDFC Asset Allocator Fund of Funds, NFO. Yet another multi-asset fund which basically invests into equities, bonds, as well as gold. But there's a difference. It does not invest in the securities directly. What it does is that it basically invests into other funds in different categories. So essentially, the fund is going to invest into equity funds, primarily the HDFC equity funds. It's going to be investing into debt funds, primarily the HDFC debt funds, as well as the Gold ETF. In terms of allocation, there's going to be 40 to 80% into equities. This would typically be in large, mid, and small cap funds or flexi cap funds. They also can take some tactical allocation into thematic as well as sector funds. Then you have about 10 to 50%, which is going to be in debt-oriented scheme, basically high quality paper in the 1 to 3 year range. So typically that would be short-term debt funds, ideally, or ultra short-term debt funds. And here too, the fund can take some tactical allocation bets based on the duration strategy. There's going to be 10 to 30% that's going to be invested into gold ETFs. The fund is going to rebalance on a monthly basis between the different asset classes, and this is really going to be based on the trailing PE, the 1 year forward PE, the price to book value, as well as certain other parameters that the fund is going to use to basically change the allocations. Now, essentially, the premise of the fund is that investors find it really difficult to figure out what sort of asset allocation to have, within equities, what sort of market cap to go with. Do you go with large cap or mid cap? On the debt side, what sort of duration strategy to go with? And how do you really rebalance all of this? How do you actually use gold as a hedge to your portfolio? So that is the basic premise of the fund. So should you invest? Over the last 1 year, there have been funds that have come. Of course, Motilal Oswal was launched last year. Prior to that, you do have the ICICI multi-asset fund, which is already available. Now, certainly the expense ratio on this fund is going to be high. It's going to be roughly about 2%. The other thing is that it's kind of really difficult to track performance of these funds, because what happens is that each of funds in this category has a different investment strategy in terms of the percentage allocation to different asset classes. So it's a little difficult to compare within the category to see how each of the funds is doing. So should you invest? Well, I think it's better to stay away. Being a fund of funds, it's got debt taxation and not equity taxation. And finally, if you invest in this fund, you're only getting exposure to all the HDFC schemes, which you can in any case take yourself, and probably the expense ratio is going to turn out to be cheaper. So certainly from a diversification perspective, this fund is not giving you the diversification to be spread across different fund houses, which means having different style of management, which is the basic idea behind the FOF. Hence, I would recommend it only and only if you find it incredibly difficult to find a fund to invest into. Otherwise, I think there are many other funds that you can choose from, and certainly this fund can be given a skip. Make sure you click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye-bye.